Hey everybody, welcome back to Map Money. So today we're actually going to be talking quickly about my 2020 goal and how we basically hit it. It came after plenty of surprises like BP, Shell, Disney, and a bunch of other companies cutting the dividend. But at the end of the day, we ended up hitting our goal. Our goal was $14,000 for the year 2020, and we would have definitely surpassed that way sooner earlier in the year, and definitely would have a lot more confidence if we have basically not got some of these dividend cuts. But it is what it is. I think in the long term, some of these companies are better off utilizing their cash flow to reinvest into the businesses. And they were paying pretty absurd dividends, as you can already know. And so them rebasing those dividends is really going to help them, I believe, transition into getting their debt down, or really just trying to transition their operating strategy for the future, whether that is for Disney or whether that is for BP or Shell or some of these other companies that have cut the dividend. So I think what we're going to actually just do today is just give everybody a quick overview of what the sectors look like for the portfolio, maybe a little bit more in depth about the yield, and then maybe go into specifically two of the companies that have the largest amount of shareholding in terms of the income I'm going to be getting from them for the portfolio. So let's just dive right into it. Don't really want to waste any of your guys' time. Hopefully it's a quick video for you guys. And hopefully we can keep this under 10 minutes. So I think I briefly did an overview not too long ago where you guys can see the capital allocation by sector here. It's about 12.3% for consumer staples, 12% for energy, 15% for financials, about 19% for real estate, 10% for healthcare. Industrials is about 9.4%, and then you have some materials just under 4%, telecom, which is just under 9%, have some cash, which is about 1.7%, a little bit of crypto at 2.5%, and then you have this growing ETFs portion of the portfolio as well. You can tell that technology is a lot smaller. I did used to have Amazon and Google under technology, but really those have kind of come under the communication services and the consumer discretionary or consumer staples sort of category now. So while they're not really strictly tech plays, but what I do get a lot of my tech exposure from is my investment in ETFs. So I really want to try to grow this ETFs portion to closer to about 25 to 30% over the next year or so. And so you'll see a lot of the kind of ETFs aspect of things kind of go into here. And what I might also do is figure out a way that I can see the main companies that I invest in terms of through ETFs, and kind of understand how it actually fits into this capital allocation by sector. So instead of really having an ETF sort of bucket like we have here that has 4%, you'll have a little bit more understanding as to, okay, yes, they're ETFs, but of course, 25% of the S&P 500 is invested in technology companies. So if I were to take that and kind of look at that ETFs bucket, then 4%, 1% of that is actually technology companies. So just thinking about that for the future. Then, of course, for income, it somewhat mirrors what we have for capital allocation, but you do have some of these other sectors, most notably financials and most notably energy, that have way higher yields compared to some of their counterparts. So you'll notice immediately right off the bat, consumer staples is about a 16% income coming from this sector, 20% for energy. So you can see it's almost twice the amount compared to how much capital is allocated there. Financials is about 11% compared to the 15% that we have in capital allocation. Then you have real estate, which is about 20%. That's almost on par with the amount of capital allocated there. Healthcare is 9% compared to the 10% that we have for the capital allocated there. Industrial is about 5.1%. That's because of some of the money is in Boeing. You have materials in there, which is 6.3%, much higher than the 3.8% compared to what we have. And that's mostly because we have BHP and LYB in the materials sector that is really giving us that extra oomph in the yield department, where I think we're getting close to about a 7% yield. Let me just take a quick check. Yeah, so 7% yield for that bad boy. Then you have telecommunications sector. This is about 6.3%. This makes a little bit sense because obviously you have Verizon, you have AT&T, but this is also combined with things like Google that don't necessarily have a dividend, and I have about 5 shares of Google, so it's about $7,000-$8,000 that are kind of just sitting there with no dividend attached to it. So you'll see that obviously there's a little discrepancy there. Cash obviously pays very little, so you don't really even show up on the income sector because it's paying about a 0.8% yield at this point. Utilities is very small as well. Cryptocurrency is not paying me any dividends or anything either, but you have 3% of the income coming from ETFs, so that's obviously your QYLD, your ITOT, and your QQQs of the world. So pretty awesome to kind of look at. Now, what I guess I really want to talk about now is really just looking at this $14,000 goal. And the cool other part about it is it's kind of like a dual little cool thing that I want to share with you guys is it looks like next year we're not going to have any payments below $1,000 a month. So unless I sell something or there's any more dividend cuts, looks like we're going to be looking pretty good. And generally the hardest month for me to kind of get up was the second month of every quarter. So that's your February's, your May's, your August's, and your November time frame. So really that was really the hardest one I wanted to get in there. And so there was a couple of companies that I actually invested a little bit of money into to be able to cross that threshold. So you'll see, hopefully, fingers crossed, that August is the last month we have below $1,000 coming from dividends in the portfolio ever again. So we'll see if in November we're able to achieve that, fingers crossed, and hopefully there's no more dividend cuts, but I think things are starting to stabilize now. So let's look specifically at the companies that have paid me the most in 2020 and maybe give a quick look as to what companies will be paying me the most in 2021 unless there's some sort of dividend cut there. So AbbVie, you can see we were going to get about $600 in AbbVie this year, $111 from BlackRock, $325 from Bryn Mawr Bank Trust, and $315 from Bank of Nova Scotia, but I did sell out of that one. You have BP, which is $672. They did have a dividend cut, so this was supposed to be a little bit higher than that, like close to $800 or so, or maybe even more for the year. But it is going to get impacted. It's also going to impact for 2021 as well due to the dividend cut. $695 coming from BP Midstream Partners. Then you have Caterpillar, which I've gotten up to $291 for this year. Next year it's supposed to be, I think, over $400. Which is awesome. Going to be getting over $100 every single quarter. I'm excited about that. I'm very excited about that. It's one of the companies I've wanted to own for quite some time. And it's kind of like going a little bit wild on the price. So I'm pretty excited about that. And have a pretty good cost basis on that. Then you have CQP, $312, GEO, $171, J&J, $371, JP Morgan, $181, which is pretty good considering I didn't even invest in it for the whole year. Kinder Morgan, $60. I've sold out of Kinder Morgan as well. Cosmos Energy quit paying the dividend, $23 for that one. $353 for Main Street Capital. Going to continue to invest in that one. 3M has been doing really well on the share price, so really wish it would kind of stay down because I am reinvesting those dividends. But at the end of the day, $284 coming from 3M. Can't complain. MO, this is one where you're going to see a huge change going from 2020 to 2021. I did drop a big tranche of money into MO. And so this year you're going to see about $779 kind of come through for MO, $350 basically every single quarter. So unless there's some sort of dividend cut, we'll be looking pretty good. And same thing with O Realty, and we'll hear a little bit about these a little bit more in the future, just a little bit later in this video. This one we're going to be looking at about $715 in terms of income just in 2020 alone, so looking pretty good there. Then you have Pepsi, which is $364. So keep in mind, a lot of these companies I'm continuing to invest in. These aren't new companies. Phillips, $66, $77, sold out of that one. Royal Dutch Shell also cut the dividend, but I invested more. I believe in their strategy going forward, and I think it's going to be a good opportunity for future growth in renewables. But that's just my opinion. Do your own due diligence. You have Stag Industrial. You have $227 coming from that. Starwood Property Trust, $133 coming from that. $546 coming from AT&T. Not exactly too sure who this company is. You have Visa, $18 basically here. $272 coming from Verizon. Just under $500 coming from Wells Fargo, which is a shame because I was really hoping at some point, I think it was supposed to be like $1,000 a year or something like that. Then they cut the dividend by 80%. So I don't think they needed to, but I think in the long term, it'll kind of come back. So anyway, different story for a different day. I had some IJR and some IVV in the portfolio, and then I sold them all to consolidate into ITOT. I didn't necessarily think I needed to have like a small cap fund as well as an S&P 500 fund when I could just have ITOT, which encapsulates 3,600 different stocks within the market. So I just said, you know what? I believe in the U.S. stock market. Let's just do ITOT. Historically, the total stock market fund has returned more than the S&P, but the S&P has returned a little bit more recently, and I think that has a lot to do with some of these big technology companies that have kind of come in. But anyway, and same thing with Johnson & Johnson and 3M. I did used to hold these in the YouTube Moolah portfolio, but I consolidated that money into ITOT and also a little bit into Amazon as well. Then you have BHP, should be expecting a pretty decent dividend payment later this month for about $200 or so. Cyrus One has basically $154 kind of coming in there. It's paying some pretty good cash coming from there. Disney also cut the dividend, but it was only a 50 or so dollar dividend every single half year that I was expecting. So when they reinstate the dividend, expecting to get about $100 a year coming from that. You have LYB. This is another one that I've kind of invested a little bit into in the year. So expect this one to break $400 next year. It's $340 for this year. Main Street Capital just under $400. Philip Morris just under $400 as well. This one should also be increasing for next year. I added a little bit more capital to that. Verizon, you can see this is in the Roth IRA as well, $89 there. WP Carey, this one should also be increasing over $400 next year, but right now it's $344 for the year of 2020. Johnson & Johnson, $85, $102 for 3M again. Visa for $17, QILD for $100, and I'm continuing to invest in QILD, so expect this one to go up. QQQ about $13, ITOT about $35. So this sort of little tranche here, these 6 stocks here, are specifically my M1 Finance portfolio where I house a lot of my ETFs, so expect that to continue to grow in the future. You had Kinder Morgan, which was 25 cents. I don't even remember what this one was. As Southern Company here, this one's supposed to be about $100 this year, and hoping that I can get there if I continue to invest a couple shares every quarter for December time frame, and then I think next year we'll obviously break over 100 there. You have MO, $92 there. This is in computer shares. You have Essential Utilities here for $27, investing $50 a month into that. You have Exxon, $640. Expect this one to increase. I just bought another few shares in Exxon. IBM, haven't been investing much, but you can see that the dividend kind of raises itself as you do some dividend reinvestments here. You have Keurig Dr. Pepper for $4, Philip Morris for $100 here, Realty Income for $1.25 every single month, so this is about $15, so not much. Clorox, putting in $50 a month into this one as well, so this one should be increasing. It's $23 at the moment. Waste Management, $14. AbbVie, $24. General Mills, $4. And you have some other small ones as well. You have Fundrise, which I'm hoping to get $137, but they did jip me on the 3Q sort of dividend here. So I'm hoping we get an expected $65 as I've been increasing heavily the amount that I have invested into Fundrise. So we'll see, fingers crossed that, it kind of breaks that $65 mark or even the $50 mark. I'd be happy with, but we'll see what happens in the future. Cardone Capital actually lowered their dividend payment from $56 to $50. So next year I should be expecting about $600 from that, whereas before I was expecting around $675 a year. So it is what it is there, but should be getting about $650 for this year for that. Website personal savings that I have here is about $30, and personal savings for just say emergency fund is $149 here. So let's just quickly run down to 2021 and see the big ones that have really changed in comparison to what we're actually looking at for 2020. So let's just do a quick little jump here. But you'll see the big ones here are Realty Income and Altria Group. You can see that Realty Income is going to be $1,200 and Altria Group is going to be just under $1,400, just over $1,400 next year, and I'm sure with some dividend raises as well as some dividend reinvestment, we'll hopefully get that to above $1,500 every single year. Pepsi, you'll see we're going to increase about $44 as well. Anyway, guys, hopefully that was helpful for you guys. Let's just give a quick look at what we're expecting in terms of, say, the graphics here. So 2019 is in blue, red is 2020, and then 2021 you'll see in orange. You'll see that some of the months are down, and that's some of the dividend cuts kind of coming through. But you'll see that we're looking pretty good, and most of the time we're going above 40 to 50% in terms of what we're looking at year-over-year growth. Right now, 2020 is looking about 57% growth over last year, which is awesome. And if things kind of continue the way they're going for 2021 with continued investment, say through the first 6 or 9 months of the year, as well as some dividend reinvestment, we should be looking at about 14% right now, but it'll continue to grow as we get the further capital invested in the latter half of 2020 and beginning of 2021. And also we have some of those dividends reinvested as a whole. So we're hopefully aiming for that 50% mark again for 2021, because that will get us from our $14,000 to our $21,000 for our 2021 goal. And that's basically it for this one, guys. Hopefully you guys enjoyed it. Hopefully we will see the 95% increase from year over year for October next month. We had a 44% or so increase, or we will be having a 44% or so increase here in September. We'll see that in just 2 to 3 weeks as all the September dividend payments get paid, and hopefully we can get a pretty good number here for September. Hopefully we can break that 18,000 or 1,800 mark, but we will see. It was supposed to be a lot bigger, but as you guys know, some of the companies cut the dividend. It is what it is, and we will see you guys on the next video. Cheers.